Hi, and welcome to this week's weekly market update with Morton Brown Family Wealth. I'm Katie Brown, and I have Cody Demmel here with me today. Hi, Cody.
Hey, Aria.
Good. So this is the week of May 10th, and there has been a flurry of economic data that has come out over the last couple of days. So we just wanted to touch base on the labor market, what inflation projections are looking like, and also talk about some pockets of shortages that are popping up as the economy starts to get back into gear here. And then finally, we want to change the conversation and jump over to some things that you can be doing right now that are productive in your own personal financial plans. So Cody, why don't you kick us off? Let's talk a little bit about the labor numbers, because they came in last week, and how are things looking?
Yeah, so labor numbers, unfortunately, were disappointed compared to some of the estimates that were out there. So they were estimating hopefully a gain of around 1 million in jobs. We actually only had around 266,000 in increases in jobs over the past month.
Yeah, and I think we're still about 10 million behind where we were pre-pandemic. So there's room for growth, and obviously much of that's going to come from the economy starting to get back up and running. But yeah, why don't you walk us through these charts here? This is interesting.
Yeah, so some of the charts that we were looking at based on obviously the labor numbers that we got last week. So the chart in the top left goes over just the increase in wages that companies are having to pay more to get the individuals back into the jobs. And one of the reasons for that is if you look on the bottom right, the labor force participation rate is a lot lower than where it was pre-pandemic. So obviously, if they're trying to get people back into the jobs, they're having to increase the wages to get those hirings back up to where they were prior.
Right. There are some incentives in place right now that make working from home or not working and taking some time off, a bit easier to stay at home. And also some things that they may need to stay at home. Parents are still at home with their children as they're being educated. And so parents are supporting them. And so some of it is, voluntary as far as stepping out of the labor force. And some of it is just, it doesn't necessarily make financial sense right now. And so we're seeing companies really sweetening the pot for incentives to come back in.
Yep. And one of the stories we saw actually local in Pennsylvania was just the increase in wages that Sheetz and Wawa are putting out to just get more employees back. I think it was around like a $2 increase. And then also some signing bonuses for Wawa and Sheetz trying to get more employees.
But how about some of the push and pull as well? That's a little bit alarming and challenging for businesses right now because there is such a disconnect still occurring with materials, and we're seeing some spike in materials and just the challenges of getting materials in for production to happen. And then that push and pull between, do they hire the employees, bring them back in, but if they don't have what they need to make the product, then it doesn't make sense to necessarily hire. And so I know Bloomberg and CNBC, both of them had a couple of great articles talking about those challenges of timing the hiring along with receiving the materials.
Yeah, so there's been a lot of different areas that have had shortages since the pandemic. And I mean, we have 4 of them here that CNBC put out in their article. So whether it's obviously the large increase we've had in lumber prices, I know we did a market update on that prior. In the top left is actually a large increase in chlorine prices for a number of different reasons. The main reason was there was a fire in one of the facilities. So there's a shortage in chlorine. And then obviously a lot of people have been staying home. So they've been putting more pools in, so there's a large increase in chlorine prices. And then obviously with the shutdown, the large increase of, shopping online, there's been obviously a lot more shipping. So packaging materials have increased a lot over the past year or two.
Yeah, I think up over 50%. And as far as the chlorine, nobody wants to hear that going into the summertime.
No.
I know that. in a year last year when some other things were cut down, the pool was the haven, So
yeah, and one thing, the inflation number came out this morning from year-over-year increase from last April, and obviously we know that the shutdown happened last year, so we're coming off a pretty low number, but we did see an inflation number of over 4%, so it's 4.2%, which is the highest inflation we've seen since 2008. So we're definitely keeping our eye on that, and I know we spoke about it multiple times in the past, but
yeah, I think the estimates were at about 3.6. So it was a surprise also, and
Yep.
we're seeing that surprise kind of shake through with a little bit of volatility here in the market as well. And we did expect, to your point, and I know we've talked about it before, we have kind of cautioned that the year-over-year numbers are going to look pretty sharp, just because of everything shutting down. But it is something that we're continuing to watch to see how the inflation shakes out, and whether or not it's just transitory. I think that's the thought also, is that we'll have this period of time as things shake out, and then it should normalize going forward. I know I was hearing some estimates of perhaps normalizing at about 2.2% going forward. Bloomberg was talking about that this morning. So, and that's, looking at 2022 and beyond, but we'll have this kind of shakeout period here for a little bit. And who knows, it's always, as we receive more data and more information, then hopefully we'll get a little bit of a better indication.
Yep.
So one other thing that we wanted to talk about today too is we recently listened to a podcast. It was a Kiplinger podcast, and they were talking about estate planning and how sometimes as people are planning for the transition of their assets to the next generation, they might have some ideas as far as what the next generation is interested in and what they would like to receive. And those ideas may not necessarily be in line with the children and what they want to receive. So specifically, this podcast talked about your stuff, not your investments, not your money, but your stuff. And really focused a lot on homes, for instance. So if you have a vacation home or just a really great primary residence, parents may think that their children will want those vacation homes or that home, when they pass, and that they're going to pass it along, and that their children are going to love it, and they're going to remember all the great vacations they had together and all the great times they had together. But in reality, your kids may not want that. And not because they don't appreciate it and didn't have great memories there, but logistically, it just may not make sense. And so as one of the things that we wanted to talk about today, I know last week, there was some discussion around estate planning and certain things you want to make sure are updated, your powers of attorney, things along those lines. But you may want to pause for a little bit, see how some tax law changes may or may not shake out before diving into big updates if your documents are not that old. So this is a really good time to have conversations with your family and ask your kids, are you interested in this? Would you like this? What were some tips that you picked up from that, Cody?
Yeah, they spoke about a lot of different areas, like you said, the vacation home, the primary residency, or even some individuals had collectibles, and their kids know that the family obviously had the collectibles, but they have no idea how to value it. So just making sure that people know how to value some of the collectibles, or say if you have a collectible car and there's one child that wants it a lot more than the other, just making sure you're having those conversations in the estate planning process.
Yeah. And you brought up a really good point there. They made sure to talk about the value of things. So you might have a large collection, and if that value is not, properly assessed, then you could have a generation and if that flows to your kids, they may get rid of it, not even understanding the true value of it. So to make sure that you have those appraisals done, that you have documentation of what the value is. And they even said, it makes a lot of sense too to build into the documents. If you have multiple children and you think it's going to be shared or going to go to one or the other, to make sure to write into the document, this is how to value this asset. And our wishes are for it to be valued at fair market value or a discount if you want to put that in there, but put it in writing to avoid arguments later on between the children. But also to make sure that, they're not taking a $50,000 collection and selling it for $1,000, on eBay because they didn't know the real value of it. So that was a good point in there. So we just recommend opening up those conversations, making sure to, bring the family into it, because I think sometimes that it can be much more surprising than thought, and it could save everybody headaches later on. Well, thank you again for tuning in to this week's episode, and we hope that you're enjoying your spring. Hope that you are having a great time this May as the sunshine's coming out, and we look forward to reconnecting with you all soon. So take care, enjoy your week. Feel free to reach out if you ever have any questions for us.